the GDP growth for Q2 coming in far better than expectations. We are also seeing that various economists have gone ahead and upgraded or revised their growth forecast for FY21 upwards, and this is slightly on expected lines. In fact, with the GDP growth now out, the focus would also be shifting to what to expect from RBI's monetary policy and the expectations of rate cuts going ahead. Having said that, if you look at the overall economists, they do state that FY21 GDP growth is now seen contracting anywhere around 6% to as much as 8.5% versus the earlier expectations from various economists, which had expected the FY21 GDP to contract as much as 7% to as high as a contraction of 16%. For instance, Nomura has gone ahead and revised the FY21 GDP growth forecast to a contraction of 8.2% versus the earlier estimate of 10.8%. Care ratings now see FY21 GDP to contract as much as 8% versus earlier expectation of 15 to 16% contraction. ICICI Securities as well as Axis Capital do see FY21 GDP to now contract somewhere around 6 to 6.5%. In fact, if you look at the overall GDP as well, the growth was of course supported by the agriculture sector. We did see good amount of rebound coming in the manufacturing GVA. Services sector still is lagging quite a bit in terms of recovery. Nomura in fact does state that growth has been better than expectations and there are signs of early recovery, but there is also high inflation. They do state that rebound has been led by agriculture, manufacturing GVA as well as fixed investments. They do state that the recovery still remains fairly uneven, with services sector still lagging industry and private consumption trailing the overall investments. The significant reduction in government spending also highlights the pro-cyclical nature of the government's fiscal stance as per Nomura. In fact, they also believe that focus would be shifting to RBI policy. While they earlier expected RBI to cut rates by anywhere around 50 odd bips in 2021, they now see no rate cuts. Rather, they do expect RBI to remain on hold throughout 2021. This in fact is a very important development, and we will of course be monitoring various other economists what are their expectations, because yes, there were at least quite a few economists expecting at least a 25 to 50 bips rate cut in 2021. In fact, Nomura states that high inflation closes the window for policy easing, and RBI is likely to revise both growth and inflation projections. However, RBI would be retaining the dovish stance. So yes, we should be watching out for what to expect. We should be watching out for even RBI's commentary in the upcoming December policy, which is there this week. But as of now, yes, quite a few upgrades coming in on the GDP front. The downside risk is, of course, we need to be mindful of the rising COVID cases. This downside risk has been highlighted by the Reserve Bank of India, by various economists, and also the chief economic advisor, who did caution against rising COVID cases and the fact that in winter months we need to be extra careful and we need to watch out for all the COVID related protocols. So yes, watch out for the downside risk there. As of now, FY21 GDP growth is seen revised upwards. Will the growth momentum continue or not? We will keep you posted on that. We will keep you posted in terms of the high frequency indicators, and also the fact that yes, we may see RBI to be on a pause in December policy.